Good day, trader. Welcome to Wasku Smart FX channel. This is Wasku Smart FX. Okay, on today's video, we are still continuing. It's just a continuity to our series, which is the principle of fair value gap. But today is episode 7. We should be talking about intermediate time high, intermediate time low, plus fair value gap. So, which means that today's topic is based on market structure with fair value gap. How we can be able to break down the market structure in a way that you can see a high possible fair value gap zone or high probability fair value gap zone where I know that okay, market is going to retrace from here, market is going to react from here. Or let me just say today if you look at our principle of fair value gap from the beginning, we have been teaching on why and how you can trade a fair value gap. I did not put any strategy out there. I did not give anybody my entry point. I'm just trying to tell people that this is how I do it. Though there are more complex things I saw for me to enter the trade. But today I'll be giving out my strategy that I use to take a fair value gap trade and how it works. So today we will not be working on 1 hour chart. Though you can see all these things on 1 hour charts. Though you can break down to 4 hours chart, you can see all these things. But don't forget, you are trading gold. And if you are trading gold on 4 hours or 1 hour, the consequence of trading gold on 1 hour and 4 hours is that you'll be having a big stop loss. So which means that if market go against you, can you withstand it? That's so you'll be trading on 15 minutes and 5 minutes. That's the way I trade on my Telegram channel. I trade gold on 15 minutes and 5 minutes or 3 minutes. So today, let's go into the charts, and before we start, I'll just have to go through a lot of market structures. But what I want to focus on today is just the intermediate time high, intermediate time low plus fair value gap. So which means that if I am bullish, I want to see intermediate time low plus fair value gap, then I'll be a buyer. If I'm bearish, I want to see intermediate time high plus fair value gap, then I'll be a seller. That is all I want to see. Okay, let's go into the chart now. This is gold here 15-minute chart. But before I start this gold 15-minute chart, I want to show you the market structures, how there is a market structure in forex market is actually very, very vast. The topic market structure is very vast to the extent that it has a lot of subtopic under it. So if you want to learn market structure in full, I will just tell you there are a lot of videos out there, but you can look at ICT, you can look at Ajo, a lot of forex traders out there teaching market structures. Then I think after principle of fair value gap, I'm going to teach market structure also. So you can just stay tuned, and when I start the series market structure, then you can join and watch your video. Market structure is very, very important when you are trading in the forex market. You have to understand your market structure very, very, very well. So today I'll just do a little recap on market structure, and I'll focus on where I want to stay, which is the intermediate time high and intermediate time low. Okay, let's get started. So this is gold here 15-minute chart, but I'll blank out this chart, so I don't need it yet. So it is hide now. Okay, let's do a little recap on market structure. Okay, let me say we're having a part here. Market doesn't move in a straight line actually. Like it doesn't move very straight. It's very shooby and a lot of up and down stuff. So you have to be able to understand that okay, this is what you are looking for in the market. Okay, let's say we have this. Market is bearish. Then the moment market wants to stop this bearishness, market is going to stop the bearishness in a way that okay, market is going to stop this bearishness because market cannot be bearish for a very long time on a run. So which means that I'm looking at this on my higher time frame or in the lower time frame. Anyhow, no matter the time frame you are looking at, this is how you want to see it. Then the moment market break this structure again and come down here, what you have been seeing is just a displacement plus a retracement. Market displays, market retrace. So which means that the moment market displays here, market traded into the fair value area. There's something you call the fair value area. There's something you call the fair value gap. You have to understand that there is difference between a fair value area and a fair value gap. Don't worry. My next series, which is the market structure, we are going to go deep on these two things: fair value area and a fair value gap. This is a fair value area, so which means market is chased into a fair value area. The market sold. It is also called what? It is also called the premium zone, because if market break the structure here, then market is actually at a discount at this level. Then you wanted to draw up into the fair value area, which is the premium zone. The market sold. Then market breaks the structure again. Then okay, let's say we have the fair value area here. We have the fair value area here. Then inside the fair value area, I have an order block, or I have a fair value gap. Now inside the fair value area, I have a fair value gap, which means that a little gap. We have talked about this in episode 1, episode 2, episode 3. Go and watch the whole episode from the beginning. In case this is your first video, go and watch your video from the beginning so you can understand my definition of fair value gap. So I have a fair value gap in the fair value area. Then when I'm expecting market to trade into it, then for me to be a seller. Then when market enters into it, the market sold. Then when market sold, market was unable to break the low. Market respected the fair value gap, right? 100%. That one is confirmed. Okay, we are looking out for market to be bearish continuation, but market want to show you that, oh, it is enough. I am not going to sell again. Then there is something you have to know. It is called the market maker footstep. You have to understand the market maker footstep when market maker want to stop a trend. So in stopping a trend, market makers ask their own footstep. They ask the way they operate and the way they move. So you have to understand how you can be able to understand when market maker want to stop the trend. So this is one of the way, or I have learned so far, of how markets stop the trend of their movement, how they stop it, how they go into another one. Either they go into consolidation or they go into bullishness. So this is it. Then I'm expecting market to sell to this low here. That is what everybody will expect. Yeah, that's what every trader will expect. Okay, we'll be expecting market to trade into this low, then to continue the whole bearishness, right? But that's not what market is doing right now. So when market did not trade to this low, then the moment market breaks this high, the moment this high is broken, then at that level here, I'm having a market structure broken. So which means that I'm having what? MSX. So there's the MSX there, which means that market structure has been shifted. Market structure has been shifted. Then when market structure has been shifted, this low here is what you call the intermediate time low. This low, I did not want to see market come down to that low. If truly market is going to be a bullish, if truly market maker want to stop the sell trend, if truly they want to stop the sell trend, if truly they are enough, like the sell is enough for them, they want to go bullish, I did not want to see market coming down to this low here, because this low here is now my confidence low, which means that anything I want to do, my stop loss will be at this low. Market should not break an intermediate time low or intermediate time high. If market breaks an intermediate time low or intermediate time high, what it means is that market is not going that way, or market just deceived, which means that there is something else up that market want to do. Market deceived you, which means that the trend is still a continuation. But if market wants to continue really, the intermediate time low should be protected by the market makers. So let's continue. Okay, now When market break this structure here and I have my intermediate time low, I will look for a fair value gap zone, because that is what I traded. That is the most confidence zone I know. I'll tell you why, and I've traded it for many people. I traded live to people. I show people that this is what works. So I don't know, but that is what I've shown to people. This is what works. Fair value gap works. That is market maker footstep. Nobody is concentrating on you. Market maker has people the target. It is not your little money. You are just a retail traders. So you have to do it. You have to make sure that you follow the big whales, which is the market makers. Follow the big whales. Follow the big whales. That just okay. Now I'm expecting market to trade into the fair value gap and be a buyer. So that is the whole structure, and that is what I called. So this is one is intermediate time low plus fair value gap. So that is what I call intermediate time low plus fair value gap. That is the whole scenarios and structures I'm looking for in the market for me to be a buyer. So vice versa for selling, also for you to sell, it is just the vice versa, which means that it's just the taunt, right? So this is the whole stuff I'm looking out for. This is all stuff I'm looking out for. I'm not looking out for any other thing. I'm not looking out for any other thing, just this alone. If you can just master the one strategy, one PS, and a lot will change in your trading movement. A lot will change in your trading movement. Okay, so let's look at into the chart and see what you want to do. Okay, so let's go into the chart now. Okay, now this is gold here, 15-minute chart. This is gold here, 15-minute chart. I'm looking at here. So this is good here, 15-minute chart now. Okay, let's get started. So looking at the old chart here, if I'm looking, let's start from 1 hour, because I like starting from 1 hour chart. I like starting from daily, 4 hours, 1 hour. But because of this video and because of what I'm trying to do on this video, just to show you how I enter my trade, it's just this video is just talking about my entry strategy. That's just all today's video is talking about. It's not talking about the whole market structure analysis and stuff like that. So on our last video, we talked about the time zone. So which means that there's a specific time zone for a high probability trade. I'm not trying to say that, oh, this is the old zone, you have to use this, that. No, I'm not trying to tell you that. But I'm just trying to tell you that there's a specific time zone. But for today's video, I just want to show you my entry patterns, the way I enter the trade. That is just all I want to show you, the way I enter the trade. Okay, let's start from this day. This on Wednesday. Yeah, this Wednesday trade. No, this on Wednesday. This Thursday trade. 22 of August 2024. So that's just 2 days ago, right? That's 2 days ago. So this is just 2 days ago. And let me just show you this chart here, and think that's all. And you can just try to master it yourself and see it yourself. So I'm going to show you two trades on this chart. I want you to look at this chart here. From what I just teach you in my video illustration, I want you to specifically look at this chart and tell me what you see on this chart. Tell me what you see before I put my annotation, before I put everything on this chart. Tell me if you can see it yourself. So just post the comments on my YouTube comments. Just post it. Oh, this is before. Screenshot this chart here and do it yourself and see if you can see the exact thing I saw. So I want you to do that. It's very urgent. Just do that yourself, because it shows that the more you see it yourself, the more you become it yourself. See, one thing about Forex is that you have to do it yourself. You have to be able to see it. It's not about reading books. It's not about watching people videos. You watch people videos from today to tomorrow without you doing the practice yourself. It will just become, it will just be theoretical on you. It will not stand firm as as an ideology, as a believing system on you. So which means that you have to understand it yourself. That is what I meant by it. You have to understand it yourself. Okay, this is good here. 15-minute charts, and this is on Thursday. So the first thing I saw when I look at this chart here is that Like looking from this side, because I have to look at this side first. I see this swing high. Market took out the swing high here. Market took out the swing high here. That's previous day. Then market was bullish actually. Market was bullish as it was taking out the highs. It was bullish. Then market traded down here. The market traded up, and I was expecting market to trade up back, but market was unable to trade up back. Then market broke the structure here. So which means that at this level here, I have my what? I have my intermediate time high. So here I have my intermediate time high at this level. Let me put a blue so that we're able to identify it. Okay. So I have my intermediate time high at that level here. Then I needed a fair value gap, right? I have intermediate time high. I have market structure sheet. I have market structure sheet here. I have intermediate time high here. Then I needed a fair value gap, and that's where I saw this fair value gap. This fair value gap here. So market traded into it. The market was bearish. That's one. That is one illustration. In case you are listening, oh, how is that? So you can see 40 pips or 50 pips stop loss is not bad. 50 pips stop loss is not bad. That's good for you. You can just target this low here because that is the specification low the market can trade it to. That's seeking of liquidity. Market seeks liquidity. If market is not trading for fair value gap, it seeks liquidity. Okay, that's the first one, right? So let's look at the second trade here using the same annotations and the same pattern, the same formula and all of that. So we got our one trade. Okay, let's look at this also. This is a trade here. So our market was showing a bullish movement before entering into the fair value gap I was looking at. The market was showing a bullish movement, right? Market traded, this was London section. Market traded bullish, like I was seeing market breaks down this high here. Though I was expecting market to come into this fair value gap for me to be a wonderful seller, right? but also I was seeing market breaks this high here, and I was not thinking market should be bullish. I was not thinking anything bullishness from the market because I know what is happening in the market. This is an intermediate time high, and I was not expecting market to come above an intermediate time high. Then I saw this also market breaks out this high here. The market goes into the fair value gap. Then when market traded low to this high here, market was unable to take out this. Then I was no a true theologists of forex will tell you that when you see market structure broken, then market traded high, then you are expecting market to retrace into the other block, the market to go up, right? But market was unable to go up here to this high. Market was unable to go up to this high here, which means that there is a rejection zone from this high. Market was unable to go, which means market not to what be a seller. Then this is another MSX. So I have my market structure sheet again, whereby I have my intermediate time high. So which means that another intermediate time high, which is so you understand the concept is just it's very easy. Market books this high here. Let me put this out. Market broke this high here. Market traded high. Market trades into the fair value area. Market was unable to take out this high, which creates an intermediate time high. This also market enter into the fair value area. Market was unable to trade to this high here. Market break the structure. Market structure shifted, which creates a fair value area and a fair value gap. This also it creates a fair value gap here and a fair value gap here. But if you look at this fair value gap here, it has been fulfilled by this candle because a fair value gap must be traded into once. This means that if market you trace to the fair value gap once, it's very sensitive for you to expect market to come to that place again. It is very dangerous to expect market to come to that fair value gap that has been filled before. So this is the second zones we are looking out for. So which means that we are looking out for the second zone, which is this. So if I put my sell here and my stop loss above the intermediate time, I can target 1 to 2. So I'm having two trade, right? So I'm having two trade, right? So this and this, trading one strategy and one pattern. So the last one I'm having here is this guy. So we have market traded high. The market traded high here. I think for us to look at this very well, let's go to 5 minutes, because this is where our whole crop is come to. Okay, you see 5 minutes now. You see, I have this first. Market was able to trade. Market traded here. The market trade into the fair value gap here. So I was expecting a sell, right? I was expecting market to sell to this low. The market was unable to sell. The market breaks. So which means that this low here and this low here. So this low can serve as what? Intermediate time low. So I have an intermediate time low on. So where is the fair value gap? This is the fair value gap here, right here. So that is why market traded into it, and market was bullish. So market was bullish, just as expected. So let me show you on my Telegram channel. I traded this whole trade here on Wednesday, right? So let's go on Wednesday. So August, that's 24. That's August 24. So that's August 24. Let's go on this whole trade and see it also, right? Okay. A little bit, a little bit, a little bit, a little bit. August 24. Because I took the trade on my Telegram channel. Okay, this is your trade here. So you can see the whole trade I'm looking out for market structure broken. So as I said, market to trade into the fair value gap here for me to be a seller and for me to be a buyer. Sorry. So it was seeing what I was targeting. So you can see this is the old trade I was looking at here. This is the old pattern, the old trade. I was not looking at any other thing. I was just looking at this old pattern. Market was unable to trade down into this. The market breaks intermediate time low plus fair value gap. It's going to give me, so you can see, just a day I captured. This one is 150 pips, 170 pips, and 130 pips. You can see how much pips I captured just in one day, using the same pattern, using the same ideology, using the same thing. I am just doing the same. Everything is the same. Intermediate time high plus fair value gap, intermediate time high plus fair value gap, intermediate time low plus fair value gap. Let me show you the result on my Telegram channel. So you can see that this whole thing was traded live. You can see when it was going high, it was traded live. It was not anything casuals or anything. So you can see how market hit the take profit. That market hit the take profit without any stress. It is just intermediate time low plus fair value gap, and that's all. So today I have showed you a lot. You can see gold 100 pips takes profit ETH. So I've showed you a lot about my strategy. That's just what I'm using, and there is nothing else. There is nothing else. If the next series will be going on market structure, so I hope you will enjoy this whole series. So don't forget to like, share, and subscribe, and don't forget to share the video. Sharing the video is very important. Let's grow the community. Let's make it 1,000, 2,000 subscribers on our YouTube channel. Let's grow it in a massive way. So I'm looking forward to more followers on the YouTube channel. And if you want to join my Telegram channel, there is a link in the description. Click on the link and you will join the Telegram channel. Thank you very much.